Hi guys, welcome back. So we are looking at audit of assets and liabilities, which is what we call verification of assets and liabilities. In that we have completed assets. First part, we have completed non-current assets like plant, motor vehicles, livestock, various assets we have completed, land and buildings. Now we are with intangible assets. Either a question can be asked in CA exams as to how do you conduct audit of intangible assets. This is a wholesale question. That means it covers all intangible assets. Or they may ask a retail question. How do you verify goodwill? How do you verify patents? How do you verify copyright? You understand? So I asked you to read 11 to 15. Did you do that? Sandeep, did you do 11 to 15?
11 to 14, then sir, 15 was about to read.
Okay, 14, 11, 12, 13, 14, you read?
Yes.
Anything you couldn't understand? Any doubt?
No, sir.
You understand goodwill?
Yes.
Principle for recording AS 10 property, plant and equipment states that goodwill should be recorded if it is purchased in consideration for money. What the hell this is? AS 10 property, plant and equipment, why it speaks about goodwill? It should be 26, no ma?
Yes, sir.
Hello, someone's mic is creating nonsense. AS 26 intangible asset states that, or better, you can write internally generated goodwill. Okay. States that internally generated goodwill cannot be recognized as an asset in the books. Only goodwill that is purchased, only goodwill arising out of business combinations can be recorded. This is appropriate, correct? This is making more sense. Goodwill arising out of business combination means amalgamation and consolidation. Okay, I feel this is making more sense. Guys, do you understand this para? Okay, verify vendors agreement. What is this vendors agreement? Eh? Hello, Sandeep, what is this vendor? Who's this vendor?
Sir, it is, I think it is in connection to the previous point. If there is any purchase, the
Correct.
person who.
Vendor here means transferor company.
Yeah, okay, sir.
In amalgamation, transferor, transferee is there, no?
Yes.
Transferor is also known as selling company or vendor company.
Yes, sir.
Then principle for recording goodwill, ascertain whether the business is earning profit which is above the normal profit in similar business. This is traditionally old way of recognizing. Amortization 26, carried at cost less accumulated depreciation, correct. Also accounting standard 14 says, one more point I'm adding. Accounting standard 14 says goodwill should be written off in your books between 3 to 5 years. Then accounting standard, ensure the compliance with generally accepted accounting principles. In brackets, you can write AS 26 if you want. Disclosure, ensure that goodwill has been adequately disclosed in the balance sheet. Khatam. Verification of patents. So do you understand all these points, ma? All of you, please tell me, patents, do you understand? Trademarks, do you understand? Guys, do you know the difference between copyright, trademark, patent? You know or you don't know? Or you don't know that you don't know? So, I have authored a textbook. Imagine. I have authored a textbook which is published by one publication house. Okay, so the textbook, the intellectual property I have put in writing the textbook, is there any intangible asset? Yes. So what right I'll get? Will I get a trademark on the book? No. Copyright. So copyright is for the content. Image may be copyrighted. Content can be copyrighted. You understand? Patent is for a technology or a process. Patent is for a technology or a process. Recipe, patent. Chemical A, chemical B, chemical C in this proportions, if you mix and this process you do, then it will give this medicine which cures cancer. Patent. Patent will be on the process. That can be a software process, or that can be a pharmaceutical thing, or patent can be on some, your signature dishes. Your signature dish will be there. Like if you are a 5-star hotel, you will develop some signature dish. For example, go to McD. There is something called Big Mac, B-I-G, Big Mac. That Big Mac is their signature dish across the globe. In India, it is not there. It is a different story. But globally, Big Mac is its signature. They will get patent on it. They will get patent on it. Trademark is on a logo or a brand. Coke tin, if you see, they'll say Coke is the registered trademark of Coca-Cola USA Public Limited Company. So now you understand difference between these wordings. What is patent? What is trademark? Hello. Can we move on? So internally generated brand cannot be recognized in your books as an asset. Internally generated brand value. For example, Tata logo is there. It has huge amount of value. PwC or EY? I think PwC. Understanding or PwC? I think PwC only. They valued Tata logo to be 4,60,000 crore rupees. 4,60,000 crores Tata logo value. But they cannot recognize that in books because it is internally generated brand. But imagine if you have purchased a brand, like how Coca-Cola purchased Maaza. Maaza is not the product of Coke originally, but they acquired it. Quaker is not the brand of Pepsi. They acquired it. When you acquire a brand, then you can recognize. You understand? Chalo, investments. Oh my God. What is this investment? Sandeep, what is this investment? These are financial assets. Pavan sir, I invested in land. That is called land. Pavan sir, I invested in car. That is called car. When you say investment, normally it refers to financial assets. That means not a real asset. It is a financial instrument, like you invested in equity shares, you invested in bonds, you invested in mutual funds, you invested in pension plans, you invested in some government notes, you invested in some sort of money market instruments. That is this one. Sandeep, read this 16th question.
Verification of investments. Meaning, investment constitutes a significant portion of the total assets. An investment may be represented by government securities, shares, debentures, etc.
Okay, continue.
Supporting and documentation. Obtain schedule of securities and shares in hand at the beginning of the audit period containing description, date of purchase, face value, book value, market value, rate of interest, date of payment of interest, date around which dividend is normally declared. Examine the documentation in relation the purchase or sale of investments.
Hey, what is this? What is this? All of you read this and tell me. I'm unable to understand these 4 lines. If someone can explain, I'll be so grateful. What is that? Sandeep, what is that, ma?
So first, the auditor needs to verify the value or the opening balances of these investments.
This
And
is
also,
like, that fixed asset register is there, no? Opening WDV, during the year purchased, during the year sold, closing WDV, depreciation, same like that. This is for investment.
okay, sir.
Normally, all these things are made in, prepared in Excel. In Excel sheet, columns you will put. All these are columns. Description, one column. Date of purchase, one column. Face value, book value, market value. Face value of company can be 2 rupees. Book value can be 150. Market value can be 1,500. Rate of interest. If it is debenture, rate of interest. Date of payment. Date around which dividend is normally declared. Many companies will declare dividend on a specific date. Then examine the documentation relating to purchase or sale of investments. What document you can verify? I said I purchased shares. Sandeep, you are conducting my audit. Today I said, hey, I purchased CCL shares. I purchased Infosys shares. I purchased Tata Motors. How will you verify?
The demat account.
Excellent. There are two ways of verifying. First thing is, I should have demat with one broker, no? Like Motilal Oswal, Zerodha, Share Khan, Angel Broking. They will send a contract note. So, Dharani, share certificate is theoretically a valid point, but now all the shares and debentures are in dematerialized form. Okay, after 2003, 2004, everything is converted into dematerialized form. Now, actually speaking, there are no share certificates. How many companies I have invested in? I have never seen a share certificate. I have not received share certificate from any of the companies. But simply in my account, that will be credited. So my broker will give a broker note, contract note they call it. That can be verified by Sandeep. Or there is another document called CAS, CAS, consolidated CAS is consolidated some account summary or account statement, something they'll give, account statement, consolidated account statement. This is sent by NSDL. So NSDL, CDSL, you might be knowing, right? Depositories. So depository is basically, it is like a bank. In bank, you'll put money. In depository, you'll put shares. Okay, so Pavan has 100 shares. With whom they are? Like how I put my 100 rupees in Canara Bank, I put my 100 shares in some depository. You understand? So NSDL, at the end of every month, they will send a consolidated account statement summary that Pavan has these shares. Sandeep can verify that also. You understand? Capital gain statement, Harini, capital gain statement comes when you sell the share. But what if I am holding the share for 5 years? Or I purchased and I have not sold. Yesterday I purchased, I have not sold. It will not go to capital gain statement. If you are verifying income on sale of investment, then you can verify capital gain statement. You understand? You can go to console, in Zerodha console bolke, and then you can download all these statements. Short-term capital gain, long-term capital gain statement. For tax purposes, they'll give you. Okay, continue.
Valuation. Examine cases where the investments are purchased or sold, come dividend, ex-dividend, and come interest or ex-interest, come rights or ex-rights, or come bonus or ex-bonus.
Including, excluding. Are you buying share including dividend right or excluding dividend right? Are you buying including rights issue right or excluding rights issue right? These are the things. Next, continue.
Existence. The auditor should also physically inspect investments. Investments should be physically verified at the last date of the accounting year.
So these 2 points are there now. If investment is held physically, verify investment certificate. If investment is with third party for safe custody like a bank locker, you have to obtain confirmation from the banker. These two are actually outdated points. but still in study material, still it is there. Next, continue.
External confirmation. Auditor should obtain the confirmation from the third party if the investment is held by a third party on behalf of the client.
Okay, next.
Nominee holder. Assess whether any investment is held in the capacity of nominee holder under Section 187 of the Companies Act 2013.
Normal point. Next.
Company law provisions. The auditor should also examine relevant provisions of Section 143, subsection 1.
Hello, what is this? Any idea, guys? Anyone? What is this 143(1)? 6 matters to be inquired upon by the auditor, and on receiving any adverse or negative comment or unsatisfactory answer on inquiry, the auditor has to report. In that, there is one point. In case of a company not being a banking company or investment company, not being a banking company or investment company, if any of the assets, shares, assets means here this investments are sold during the year for a consideration which is less than cost of acquisition, the auditor has to mention it in his audit report through 143(1). That also you need to verify, but that we'll see in company audit, don't worry about it. Next, continue.
Valuation and disclosure. The auditor should satisfy that the investments have been valued and disclosed in the financial statements in accordance with AS 13 on accounting for investments. Classification. Investment should be properly classified as follows for the purpose of valuation. Long-term investment.
Long-term current investment.
Related
so
parties.
what are the rules for long-term investment? What is the rule for long-term investment valuation?
It should always be valued at cost. Current investment, cost or market price, which are lower.
Very good. It is called MTM. Have you heard MTM?
No, sir.
Mark to market. That means fair value. Look at the market value. Based on that, you need to value. Long-term investments normally at cost, but if there is any permanent decline or any decline which is not temporary, then a provision is to be created. Best example. We used to struggle for examples, but nowadays we are getting example for everything. S Bank share, 400 rupees it was. Now it is 12 rupees. Imagine you invested in 1000 shares of S Bank. From 400 rupees, it has fallen to 280. You have added 500 more. Then it has fallen to 133. You have added another 1000. Then finally it came to 12 rupees. What to do? Nothing to do. Sir, who is this bad luck fellow, sir? Nanda. Now we know that this 12 rupees will not become 430 again. So what to do? Even if I have the intention to hold this for 10 years also, it can be long-term investment. For the last 3-4 years, I'm holding it. What to do? Reduce that, charge it to P&L. Understand? Income tax department people will not accept, they will add it back. Accounting is different, tax is different now. Income tax officer will call and ask, are you kidding me? If you are a chartered accountant, you'll do this kind of accounting. Then I have to say, sir, sorry, sir, accounting standard 13 says that only, sir. What to do, sir? Chalo. Anyway, next, continue.
Related parties. In case of investment in the shares or debentures of a subsidiary, the auditor should obtain a complete schedule of all such investments held, showing particulars as regards the name of the subsidiary company, class of shares or debentures, date of purchase, number of units, etc.
So it can be subsidiary, it can be associate, it can be joint venture, it can be co-subsidiary. Hey, tell me one thing. Can a subsidiary company hold shares in holding company? Sandeep, can a subsidiary company hold shares in holding company?
Don't know, sir.
It is prohibited. As per Companies Act 2013, no. Subsidiary company cannot buy shares in holding company.
Okay.
Previously, yes. Before 2013, yes. Now. Okay. So they are saying non-current investments as per Schedule 3, you have to disclose it. So that is also fine. Now, if it is already holding, that is exception. You cannot buy now. If it is already holding, that too subject to certain terms and conditions. That is a different thing. Okay. So before introduction of this Companies Act 2013, already subsidiary company is holding shares in holding company. Then there are some extension that is allowed. Okay. Now tell me one thing. Can a company invest money in a partnership firm? Can a partnership firm invest money in a company? So tell me, this is A. One is allowed or no? Hello? Okay. So Sandeep is saying one no. Dharani is saying one no. One no. One. Super. This is 3. Hey. Ayyo. This should be 1. Restart it 1. So everybody said 1 no and everybody said 2 yes. Sandeep said 2 also no. One yes. 2 no. Why? Harini, Bhuvaneshwari. They have started a partnership firm, DHB and Co. Hello, Dharani ma'am. You earned 3 crore rupees profit.
Okay, sir.
In 21-22 financial year.
Super, sir.
3 crore, but you are very rich, okay? You don't know where to keep money.
Okay, sir.
Very rich. So you don't want to take your share. So you told remaining 2 people also, hey, why don't we invest this 3 crores in some company? Then you have decided to invest this money in Infosys shares.
Yes, sir.
Can DHB and Co partnership firm invest money in a company?
You said no, sir.
The answer is no. Why? Because already I told second one no. Why? Because a partnership firm is not having any separate legal entity status. So when it is not a separate entity, how can it invest? 3 partners as joint holders. Dharini, first holder. Harini, second holder. Bhuvaneshwari, third holder. Like that, you can purchase the shares in your individual capacity. You understand? But a company can invest money in partnership firm. Say, for example, now there is Pavan Kumar Limited. I know that you are earning huge amounts of money. One fine day I called you, hey, Harini, can I invest 5 crore rupees in your business? Hello, madam. Will you allow, madam? Hey, will you allow or no? No response. Hello, are we connected? You are listening to me?
Yes, sir.
None of these 3 are speaking. We don't want your investment. We don't want your face also. If you are okay, I can invest money in that partnership firm. Then in that partnership firm, what happens, you know? In the partnership firm, capital, Dharini, X rupees. Harini, Y rupees. Bhuneshwari, Z rupees. PK Limited 5 crores. Yes, you can write. You can write. A company can invest money in partnership firm. A company can be a partner in a partnership firm. You understand? Sir, why you told all these things now, sir? Because the next question is investment in the capital of a partnership firm by a company. Possible. Company is investing money in a partnership firm. And what is that? It is company's capital in the partnership firm. You understand? So, Harini madam, read this.
Investment in the capital of a partnership firm by a company. Supporting and documentation. Verify the authenticity of the capital balances of the partners with regard to the clauses of the partnership deed. Internal control. Make sure that the firm has been duly registered and note the particulars sent for registration. Presentation. The amount of the loss, if any, falling to the share of the company should be debited to the profit and loss account. The share of profit should be similarly credited to the profit and loss account.
Simple. So from partnership firm, this company has got 1 crore rupees of profit share. Take it to credit side of P&L. Or this year partnership lost 2 crores. In that my share is 50 lakhs loss. Debit to company P&L. Okay. Next. Continue.
Reporting and documentation. Examine the latest audited balance sheet and profit and loss account of the partnership firm. Disclosure. Check whether investment in the partnership firm is independently disclosed in the balance sheet under the head non-current investments as per Schedule 3 requirement.
That's all. Simple question. Railway siding. What is railway siding? Guys, any idea what is this railway siding? Hello, madam. What is railway siding, madam? Harini, madam. No idea. So it is like, Reliance Industries, they have, established a factory in one remote location. Okay. So they need raw materials because it is a huge factory. Daily they need tons of raw material. Say, for example, every day 200 tons of raw material they need. Now that raw material is supplied in train. So one train is coming, goods train is coming with the materials. But imagine goods train has 100 coaches, 100 bogies. That quantity of coal or that quantity of any material, how will you take from railway station till inside your factory? From railway station inside your factory, there is 35 kilometers. How many lorries you need? How much of labor cost you need? So Reliance Industries will go to Narendra Modi Sahab and say, Anna, ask Indian Railways people to put one private track from this railway station inside my Reliance factory, Anna. Sir, will they agree? Yes. Then this private track laid between this railway station up to Reliance Industries township inside the factory till go down. So train comes up to this point on Indian Railways track. From here it will take turn to Reliance Industries track and it will go inside the Reliance. You understand what is railway sidings now? Hello? Guys, do you understand what is railway sidings? That's
Yes,
all.
sir.
Harini, read these 3 points now.
Railway siding. Ownership. Examine agreement with the railways for availing of the facility.
Only
Valuation.
Indian Railways can allow you. Only Indian Railways. No other party can give a contract. So, if you are conducting audit of Reliance Industries, verify the agreement with Indian Railways. Next, continue.
Valuation. Verify all the expenses connected with the laying of the rails and making individual agreements. The amount paid to the railways, if any, should make up the cost.
Okay.
Depreciation. Proper depreciation should be charged, keeping in view the terms of agreement with the railways, the permit or lease, if any, for the land used in providing the siding, etc.
So they are speaking about depreciation. Depreciation should be charged, because it is asset. Okay. Then book debts. So guys, if you observe till now, whatever the assets we have seen now, they are non-current assets. Tangible or intangible, they are non-current assets, isn't it? All these are non-current assets. So first we spoke about fixed non-current assets, in that fixed assets, in that tangible assets, after that intangible assets, after that investments. You understand? After that, now we are coming to current assets. Verification of current assets is actually more easier. Verification of current assets more easier. First one is book debts 19. Then big one. Then 20 cash at bank. How will you verify? Then cash in hand. Then inventory AS2. Work in progress. Okay. Work in progress. Then investment in shares of a subsidiary. But already we have covered this. This 24 is already covered. Investment in shares of subsidiary already covered. Then goods sent on consignment. Then stocks lying with third parties. Then goods sent on sale on approval basis. Goods in verifying of goods in bond. What is goods in bond? We'll see. Then capital work in progress. Verification of bills receivable. Verification of advances. All these are current assets. Prepaid expenses. Loss of stock by theft. Assets acquired on hire purchase we covered already. Assets acquired on hire purchase we covered. So with this, verification of assets is over. What is the next part? Verification of liabilities. Before we go to verification of liabilities, what are all the questions we have? We have from question number 19. So guys, what we are going to do is start from question number 19 till verification of liabilities. All the current assets. All the current assets. You read, try to understand, then we will discuss if you are unable to understand. If you are able to understand, that's it. We'll go to liabilities. If you are unable to understand, then we'll discuss about it. Okay. So till now, whatever we have discussed, any doubt?